Here's a summary of PayPal's PYPL Q2 2026 earnings call, designed for clear and concise delivery. Introduction. Good morning, everyone. Today, we'll recap PayPal's second quarter 2026 financial performance and discuss our strategic outlook. Joining me are CEO Enrique Lors and CFO Jamie Miller. CEO's overview. Enrique Lors. I'm encouraged by the steady, tangible progress we're making in our transformation. This quarter, we delivered results that exceeded expectations, driven by disciplined execution across the business. Key Q2 highlights: revenue growth increased by 5% year-over-year. Transaction margin dollars grew 1% or 3% excluding interest on customer balances, demonstrating strength in Venmo, credit, and Braintree, even as we increased growth investments. Non-GAAP EPS came in at $1.38, a slight 1% decline year-over-year, but exceeding our guidance. Total payment volume, TPV branded checkout TPV stabilized, growing 2% on a currency-neutral basis. Venmo and Braintree showed robust momentum, with TPV growing in the mid-teens. Free cash flow. We generated strong free cash flow, enabling continued business investment and capital return to shareholders. Full-year guidance raised. Reflecting our confidence, we are raising our full-year guidance for transaction margin dollars and non-GAAP EPS. We also anticipate online branded checkout to grow in the low single-digit range for the year. Strategic pillars. Our multi-year transformation is built on 5 key changes. 1. Diversifying beyond checkout. Expanding into financial services across PayPal and Venmo, which we see as the primary driver of future transaction margin growth. 2. Accelerating growth businesses, driving momentum in Venmo and our payment service provider, Braintree. 3. Rebuilding the consumer network, investing in technology and data to better serve our highest value consumers and create more merchant value. 4. Simplifying operations, streamlining our organization around 3 core businesses with clear accountability. 5. Modernizing technology, focusing AI and technology investments on clear business priorities with measurable outcomes. Business unit strategies, checkout solutions and PayPal. Our strategy centers on the consumer, aiming to make PayPal a more integral part of their everyday financial lives. This involves deepening relationships through financial services like Buy Now, Pay Later, PYPL, and credit, and leveraging data and AI for personalization. We're seeing early success with initiatives like PYPL expansion and PayPal ads. Consumer financial services and Venmo. We're evolving Venmo into a broader money management platform. Our focus is on strengthening the core P2P experience, then driving adoption of financial services like the Venmo debit card, which significantly increases ARPA. Payment services and crypto. Braintree continues its streak of profitable growth. Our focus is on driving adoption of value-added services, doubling down on underpenetrated segments, and unifying Braintree, PayPal Complete Payments, and Hyperwallet into a single foundation for a better merchant experience. Cost savings and technology modernization. We're making good progress on our plan to deliver at least $1.5 billion in savings over the next 2 to 3 years. This involves simplifying our organization by removing 3 layers and increasing spans of control. Our technology modernization efforts are focused on creating a single, modular, and scalable platform, migrating to the cloud, and enhancing customer experiences. M&A speculation. Regarding recent M&A speculation, we do not comment on market rumors. Our responsibility as a board and management team is to maximize long-term shareholder value, and we believe our transformation strategy is the most effective path to achieve this. However, we remain open and objective in evaluating opportunities that could create superior shareholder value. CFO's Financial Details Jamie Miller. Thank you, Enrique. The team's focus on sharpening our strategy and executing rigorously is yielding positive results. Key financial metrics: Q2 2026 total payment volume, TPV $486 billion, accelerating to 9% currency-neutral growth. Online branded checkout, stabilized at 2% currency-neutral growth. Braintree and Venmo, mid-teens TPV growth. Revenue grew 5% on a spot basis, 3% on a currency-neutral basis. Financial services revenue is on pace to grow twice as fast as the company. Transaction margin dollars, excluding interest on customer balances, increased 3%, driven by Venmo monetization, strong credit performance, and Braintree improvements. Non-GAAP EPS, $1.38, a 1% decline year-over-year, exceeding guidance due to stronger TM dollars and a lower tax rate, partially offset by higher non-transaction operating expenses. Adjusted free cash flow, $1.8 billion. Monthly active accounts increased 1% to 228 million. Transactions per active account, excluding PSP, grew 7%, accelerating for the second consecutive quarter. Investments and operating expenses. We've invested more heavily in high-priority areas, leading to higher non-transaction operating expenses in Q2 and expected in Q3. These investments are in platform and cloud modernization, risk capabilities, and growth initiatives. Part of this increase is timing, as we invest ahead of cost savings that will become more material in Q4. Capital allocation. We completed $1.5 billion in share repurchases in Q2, bringing the trailing 12-month total to $6 billion. Guidance. Full year 2026, we are raising our full year guidance. Transaction margin dollars, approximately $15.6 billion, or $14.5 billion excluding interest on customer balances, representing 7 to 8% growth. Non-GAAP EPS, $5.38. Adjusted free cash flow, at least $6 billion. Share repurchases, approximately $6 billion. Online branded checkout TPV, low single-digit growth on a currency-neutral basis. Growth investment headwind, modestly lower than previously anticipated. Guidance, third quarter 2026 revenue, currency-neutral low single-digit growth. Transaction margin dollars, slightly positive. Transaction margin dollars, excluding interest on customer balances, slightly positive to low single-digit growth. Non-GAAP EPS, decline within a low single-digit range. Cost savings progress. We've identified actions to unlock approximately $400 million in new run rate gross savings by the end of this year, with some realized in Q4. We anticipate a transformation-related charge of $120 million to $140 million in the second half of 2026. A significant portion of these savings will be reinvested into growth initiatives. Concluding remarks. In summary, Q2 demonstrated solid execution and stabilization across our business. We are confident in our strategy to drive diversified and durable growth, and we are raising our full-year guidance. Thank you for joining us today.